So you see in the market trend, right? If my analysis is, every person has its own analysis and its own judgment on models to calculate the future prices. So we are not going into that, how to find out the expected spot rate, how to find out this one. So that is, there are different models. We call this econometric models to find out that. Some believe that, some see the trend. Okay, in every June, the price of peso is going to be decreased. This is called technical analysis. You see the trends. Some find out that, okay, this country is going to be like increasing in economic growth, so we will be using the economic growth model. And we find out that no, this time is different. Last year in June, the peso declined, but this year we expect that it's going to increase. So there is market consensus? No, there is market differences. Some say it will increase, some say it will decrease. And you bet your own analysis. You see that, okay, you say that, okay, my analysis is good, and you say that I expect it's going to be decline in future. So what is your position? Right? Your position is already that. So what will be your position in this scenario? You expect that it will decline. It means you are going to sell. You enter into this contract into a selling future contract, right? So when the settlement date arrives, so it's April 4 to June 17. So when the actual date arrives, when you are here, you enter into this contract in which you say that the future rate is 0.09 and reference rate is 500,000 Mexican peso, and that's it. So when you arrive here, the market is now 0.08. Your expectation turned right, and you entered into this contract of sell 500,000 pesos at point this one. So the person, the counterparty here, he will purchase from you 0.09. The question didn't mention that this is non-deliverable contract. So what you can do, you have to provide this 500,000 pesos and he will give you the amount, which is 45,000, right? So how you can arrange it? You go to the market, you buy at 0.80. So 500,000 multiplied by 0.08, answer is 40,000. So you spend 40,000 from the open market to purchase 500,000 pesos. You hand over this to the person from which you have a future contract, because this is contract, and contract has obligation, and he is obligated to purchase at 0.09. So our condition of profit turns right. And what is that? Buy low, sell high. And how much is the profit now? $5,000. Right? So here, my question is, can you enter into two contracts? No, because nobody else is providing you information that I'm also going to enter into this contract where you can buy future. So there is no buy future here. It means you are only relying your own analysis. So good luck, because it turned out right. So here is the graphical representation. April 4, you enter into this contract to sell, right? So when you are going to sell on settlement date, you will be receiving $45,000 for 500,000 Mexican pesos. And this would be the future rate. The spot rate is 0.08. How you can satisfy this 500,000 pesos? You go into buy to the open market, you buy 500,000 Mexican pesos, at 0.80 and you deliver it to the seller. The difference is 5,000. So the gain on the future position is $5,000, which represents the difference between the amount you receive when selling the pesos in accordance with the future contract versus the amount paid for those pesos in the spot market you purchased. So everybody understand that? If no, then please say repeat. Okay, well done. So let's move forward. And now, currency future market efficiency. This is very interesting concept. So what do we mean by efficiency? If markets are efficient, then your analysis, let me change the ink. So your analysis doesn't matter because then market will be in consensus. Sorry about the spelling mistake. If everybody, not you, if everybody, every market participant expect that the peso gonna be decline, right? Then nobody will be entering into this future rate contract. Why? Because then everybody is having a position that it's going to be decreased. Then everybody is looking out to make some profit, right? When everybody is looking out for making some profit, then only this contract will be present. The minimum contract will be present like this, because everybody knows that, or everybody is in consensus that the future price of the Mexican peso is going to be decline. If consensus is like 50%, 50% will say that it will increase and 50% will say that it decrease. It means in the market there is no consensus, which means people have, we call that different information. The specific name is asymmetric information. Asymmetric information, which means different information. So that's why half of the analysts or speculators or currency agents, they have different view, and 50% they have different view. So market are not in agreement or not on the same agreement. There are different terminologies, you can say that. Or market is not efficient. If fully efficient, then everyone has the same information. We call the systematic information or symmetrical information. Everybody has the same information, right? And now let's talk about what is efficiency. So if the currency futures market is efficient, the future price should reflect all the information available. For example, new CEO is going to be stepping down tomorrow. So it will like affect the stock market. Now let's talk about the currency. For example, there is like a corruption case against the Korean president, and the chances are that he's going to be like stepped down. So what will happen? This is a news. Then everybody says that the Korean won price is going to be decreased. Why? Because over there is political unrest, right? So it means everybody has the information. So you will see the market already, their future prices, the price or forex, it start decreasing. You have seen the similar trend before the election as well. There is political instability and the value of the dollar start decreasing recently, right? You have seen that. But You won't see that the futures are increasing. No, the short-term future, for example, 30 days, 40 days, the recent days, 1 month after the election, because there is still uncertainty. And now who won the election? And you will see that there's going to be stability in the market. So efficiency means when all the participants, they have the same information. So we say that in the future market, for example, if the dollar rate is 7 yuan per dollar, it will be the same. And everybody expect that it will be the same. Why? Because everyone has the same information. So it means the continual use of particular strategy to take position in future currency future contracts should not lead to abnormal profit, which means if you think that you outsmart the market, you are very smart, then in efficient market, nobody is smart. You cannot get the abnormal profit. Only normal profit with respect to time, like interest. If you buy some currency and you hold some currency, only it can compensate, like if you are saving your money with the bank. That's it. So the research has found that the currency future market may be inefficient. However, the patterns are not necessarily observable until after they occur. So you think that finding efficiency is very easy? Then the answer is no. It is very hard to observable, like what we have seen in our stock market, crash. Everybody was saying it will happen, but nobody was saying that it will happen tomorrow or in 1 year or whatsoever. So only one or two people were right. And if you want to see that, you can see the documentary called Big Short. Only 2 or 3%, they just analyze that, okay, it's going to be like, crashed, and how we can make profit. So they short the market. We'll talk about what is short, what is long. I think in our coming lectures, we'll talk about this. So just for curiosity, you can see that documentary as well. So where we were here. So however, the pattern are not necessarily observable until after they occur, which means that it may be difficult to constantly generate abnormal profit from speculating in currency futures. So you won't see any agent who always earn profit. If you are receiving the messages from different agents on WeChat, guaranteed profit from investment in bitcoins and all the stuff, you will see in coming future, that the prices of the Bitcoin going to be decreasing sharply. Okay, so uses of currency futures. We already know that it's going to be used for hedges and it's going to be used for speculation. So here is the summary. What is the appropriate strategy? So you purchase future contract when you hedge payables. When you want to pay, then you purchase future. When you want to receive foreign currency, you sell future. Right? We talked about the